I came across this stock that's just wild. It's called Strive, ticker ASST. And when I say wild, I mean this thing surged over 1,000% earlier this year, hit $13, and then crashed over 90% down to about $1. Pretty insane, right? So what even is this company? Here's where it gets weird. Strive used to be this tiny social media marketing business called Asset Entities. They help people manage Discord servers. Yeah, Discord. That was their whole thing. They were making like $300,000 a year, basically nothing. But then in September 2025, everything changed. They merged with Strive Asset Management, this company co-founded by Vivek Ramaswamy. You might know him from politics. And they completely transformed into something totally different, a Bitcoin Treasury company. Here's the setup. They raised $750 million in private funding. Not a loan, just straight cash from investors. And their entire plan is to take that money and buy Bitcoin. That's it. That's the business model. Buy Bitcoin, hold it, and try to outperform Bitcoin itself through smart financial moves. Now, you might be thinking, why not just buy Bitcoin directly? Good question. The idea here is they're not just sitting on it, they're doing what they call alpha strategies. That means buying distressed crypto assets at a discount, acquiring companies that have cash, and converting that into more Bitcoin. Basically, any creative way to increase the amount of Bitcoin per share. Think of it like this. Imagine you had a piggy bank, but instead of just putting coins in it, you're also buying other people's piggy banks that are on sale, dumping their coins into yours, and trying to end up with more coins than if you just bought them normally. That's what Strive's trying to do with Bitcoin. So here's where it gets really interesting. In late September, they announced they're buying Semler Scientific. This is a profitable medical device company that also happens to hoard Bitcoin. The deal's worth $1.3 billion, all in stock. And if it goes through, Strive would own over 10,900 Bitcoins combined. That puts them in the same league as MicroStrategy, which is basically the king of corporate Bitcoin holders. MicroStrategy pioneered this whole strategy of using company money to stack Bitcoin. Strive's trying to take that playbook and run even harder with it. But here's the catch. All of this comes with massive dilution. When they merged and raised that $750 million, they went from under 10 million shares to somewhere around 500 million shares. And the Semler deal, that adds even more. So yeah, they've got a ton of Bitcoin coming, but your slice of the pie keeps getting smaller. Let's talk numbers for a second. Before all this, Asset Entities was making about $173,000 in revenue per quarter. That's not a typo. Meanwhile, they were losing over $2.5 million per quarter. Gross margin was decent at 65%, but operating margin was negative 1,000%. They were spending 10 times what they were bringing in. Now with the new strategy, traditional metrics basically don't matter. Price to earnings doesn't exist. They're losing money. Price to sales over 1,000 times. But that's because nobody's valuing this based on their Discord business anymore. The whole valuation is now about Bitcoin. So right now, the stock's trading around $1. The company just raised money at $1.35. And their book value per share after the cash injection is probably also around $1. So you're basically paying what the assets are worth. No premium, no discount, just straight up asset value. That's actually kind of interesting because when this thing was at $13, people were paying way above asset value on pure hype. Now at $1, you're getting the assets at cost. If they execute, there's upside. If they mess up, well, you're already pretty close to the floor. Now, let's talk risks, because oh boy, are there risks. First off, Bitcoin itself. If Bitcoin crashes, this stock crashes harder. They're levered to crypto without actually using debt yet. But management said they might add leverage in the future to juice returns. That's a double-edged sword. Second, execution risk. These alpha strategies sound great on paper. Buying distressed assets, acquiring companies for their cash, all that. But it's never been done at this scale by a public company. Can they actually pull it off, or will they just light money on fire trying? Third, dilution. I mentioned this already, but it's worth repeating. The share count keeps exploding. The Semler deal alone is giving Semler shareholders 21 shares of Strive for every share they own. That's nuts. And if the stock stays low, they might need to raise more money, which means more dilution. And fourth, legal stuff. There are already law firms investigating the Semler merger to see if it's fair to Semler shareholders. Because honestly, swapping a profitable medical business for a volatile crypto stock, that's a tough sell for some investors. But here's the thing. If Bitcoin enters another bull run, and if Strive actually executes on their plan, this could be huge. They're positioning themselves as the first true publicly traded Bitcoin treasury company. Not a miner, not an ETF, a pure Bitcoin holding company with a twist. MicroStrategy trades at a premium to its Bitcoin holdings because investors believe in the strategy. If Strive proves they can do the same thing, or even better, the stock could re-rate higher. We're talking potential for serious upside if everything clicks. Right now, the technicals are interesting too. The stock hit a low of 78 cents in late October. Then it bounced 27% in one day on massive volume. That kind of move usually signals either a bottom or at least a short-term relief rally. It's back above $1 now, which is psychological support. Resistance is around $1.35, where the PIPE investors came in. Then $2, then $5. Each of those levels is where earlier buyers might want to exit. So it's got a lot of overhead supply to work through before it can really run again. The moving averages are all messed up because of the volatility. It's way below the 50-day and 200-day averages. That's technically bearish, but the RSI was oversold and just bounced, and the volume spike suggests there might be some real buying interest coming back. So what's the outlook? Near term, all eyes are on their Q3 earnings, probably mid-November. That's when we'll see if they actually bought Bitcoin yet. If they announce they've deployed the cash and own thousands of Bitcoins, that's a catalyst. Also, the Semler deal. If it closes smoothly, that's huge. If there are delays or lawsuits, that's bad. It's a big event risk hanging over the stock. Midterm, like next 6 to 12 months, this thing will probably trade with Bitcoin. If Bitcoin goes up, Strive goes up. If Bitcoin crashes, this crashes harder. It's that simple. The big question is whether they can actually generate alpha. Can they increase Bitcoin per share faster than just buying and holding? If yes, the stock deserves a premium. If no, it might trade at a discount to its assets. So is this a buy, hold, or sell? Honestly, it's a hold. If you already own it and wrote it down, holding makes sense to see how the next few quarters play out. Selling now just locks in your losses. If you're thinking about buying, this is purely speculative, like only use money you can afford to lose. It's not for your retirement account. But if you're into high-risk, high-reward plays, buying around $1 isn't the worst entry. You're close to asset value, and if Bitcoin runs, you could see serious gains. But if it breaks below 60 cents, that's a red flag. That means something's really wrong, either with Bitcoin or with the company's execution. The other thing to keep in mind is that Bitcoin itself might get a better bet. Why take on all this company risk if you can just buy Bitcoin or a Bitcoin ETF? Strive only makes sense if you believe they can actually outperform. Here's my take. This is a binary bet. Either they execute, Bitcoin rallies, and this thing flies, or they stumble, Bitcoin stalls, and it bleeds out. There's not much middle ground. The fact that they raised $750 million with no debt is actually pretty smart. They have dry powder. The question is whether they use it wisely. And the Semler deal, if it closes, adds real earnings and more Bitcoin. That could be the catalyst that legitimizes the whole thing. Or it could be a distraction that divides management's attention. One last thing. This stock has been a magnet for speculation. It went from 60 cents to $13 on hype, then crashed back down. Retail traders love it. But that also means it's volatile as hell. You could see 20 to 30% swings in a day. So yeah, Strive is basically a leveraged Bitcoin play wrapped in a publicly traded company. It's got huge upside if things go right, but it's also got huge downside if they don't. If you're okay with that kind of risk and you believe in Bitcoin long term, it might be worth a small speculative position, but don't bet the farm on it. This is a swing for the fences kind of stock. For me, I want to see if they actually deploy that cash and start stacking Bitcoin. I want to see if the Semler deal closes, and I want to see if they can prove they're not just another hype stock that fizzles out. Because right now, at $1, it's priced like the market has zero confidence. But if they execute, that could change fast. And that's the opportunity here. You're buying when everyone's skeptical, but you're also buying a stock that's down 90% from its highs for a reason. So keep your position size small, watch the catalysts, and be ready to bail if it breaks down. Hope this video helps you on your quest for profits. Catch you on the next one.